Monday, October 6th. It's a big show. A big show. We got 3 things I learned from Peter Lynch, legendary, from the compound this weekend. We'll go over that. I will give you a Peter Lynch stock screener. And newsflash, government is still shut down. Is it something to worry about? We'll look at that. The best stocks of the last 5, 10, and 15 years. We will go over that. Plus, there is one that is soaring 25% today. It's up 35% because of a deal with OpenAI. And I've mentioned this one before. Alpha picks, I will show you the picks since June, how they've done. I will show you all of that. What's happening this week? We will go over all of the volatility plays. Tuesday's a big day for OpenAI and Amazon, Tesla. We're going to have a big one on Tuesday as well. Thursday kicks off earnings season. I will go over crypto because we've got all-time highs in crypto. I will give you a paywall hack. So if you want to read articles that are behind a paywall, I will give you a hack. Stocks I have mentioned that just got upgraded in the quant, we will go over that, and a short. If you're interested in shorting the market, here's an idea. So that's your entire list today. So I want to go over. I listened to the Compound and Friends. I'm not going to put it up here. You know, the markets are soaring right now, but this weekend's Compound and Friends with Josh Brown, he interviewed Peter Lynch, an absolute legend. If you don't know, even in down years, this guy didn't have a down year. His average return per year was like 30%. It was the Fidelity Magellan Fund. Go and Google Peter Lynch. He's a legend. And yes, he's still at Fidelity. But that's Josh Brown. But Peter Lynch, that's him. He's older. You know, he's not actively managing stuff again. But he had a great insight. The first, know what you own. He tells a great story about Barbara Streisand calling him. This is your elevator pitch. This is why I tell you, you need to know and you need to journal about what you own. And he basically tells you, hey, that's what I did. That's what I did. And then this clip, this is how, you know, he talks about how he did his research. He went and bought 35 pairs of leggings, pantyhose. And he said, I believed in Hanes, and then I bought their competitor, and it wasn't as good. So, you know, again, this is just a little clip if you don't want to listen to the whole thing. And another clip. This is him talking about everybody throughout his career always talked about the big crash that's coming. And he said it never came. My opinion's very similar. I think you'll see 40% pullbacks like we did in 2022. That was during a historic rising of interest rates. You had a clear and present reason for that going down. But I don't think you see a major drawdown that takes us down multi-years like you did in 2000. Even if this is a bubble, there's too much money, there's too much interest in governments pushing this up, and there's too much information for even the average investor for something like that to happen. So I believe, again, he goes over that in 1929, only 1% of U.S. Americans owned the stock market. It was the unemployment that caused the depression, not the stock market. So yes, you lost money, and the rich lost more than anybody. But it was the people in America who were hurt by it. So do I think that type of thing could happen again? Yes. But I think there's too much government interest in the market for it to actually crash. We saw that during COVID. Everybody just flushed every human on earth with cash. And you're seeing it now. So I went back in and I said, oh, okay, Perplexity, here's the link to this podcast. It was so good. Now, Peter Lynch is the guy. Go back and research Peter Lynch. And I said, give me 3 lessons. Okay, first, invest in what you understand. And we just said this. Don't own a stock that you don't know what they do. You have so much information at your fingertips today. You can just go and ask AI, what does this company do? If you like the narrative, go and invest in it. Focus on company fundamentals, not market noise. There are a lot of stocks out there that are just noise. Peter Lynch would not invest in noise. I don't think you should either. Should you trade noise? Absolutely. That's why I've got a mix of fundamentals using Seeking Alpha Premium and Alpha Picks, and I have TrendSpider, which are the charts. You can trade noise. You can't invest in noise, but you can trade noise. Now, that doesn't mean something like IREN, something like Nebius is just noise. They have actual business plans, but remember, these are companies that are not currently making a lot of money. They have money that is pushed out. Nuclear, quantum computers, yes, it's all pushed out. So these are long-term thesis without the fundamentals to back it up. But he puts out number 3, be patient and let the winners run. And if you have winners, if you see a stock chart that is bottom left to upper right on a long-term stock chart, meaning, look, this is QQQ, bottom left to upper right, more than likely it's not going to crash. If it does, you pull up a monthly chart like this and you say, well, I just lost confirmation on the 9-day right there. Maybe I should look at pulling a little back. And then you get something like March 2022, which was up 4%, and you get super excited and you buy back in. Well, you've got to make your determination what are winners, but let them run. Be patient. Do regular check-ins on the business. Remember what I said? Understand what you invested in. Write your thesis down. If for some reason next quarter the thesis changes because they all of a sudden fire the CEO, change the investment. And so what did I do? I went in and I built a Peter Lynch screener, and I've had this for a while. Okay, I check in on it every now and then. What's on top? Micron. That has been on top for a long, long time. In fact, it's one of the top strong stock buys in the quant, and it has been for quite a while. You can see this goes all the way back to 122. Where are you trading today? 197. In fact, biggest movers today, one of them is Micron. Why? Goldman Sachs just upgraded it to overweight, and they pushed their price target to 220. That's a 17% upside from where it closed, but FYI, you're up 5%. So if you bought it at 197 and it does get to that 220, great. What's Wall Street say that it's worth? They say the average price target is 188. It's going to open up higher than that. So you have to have a thesis on it. But again, that's just me. I like to have a thesis. I like to journal things. Again, 3 things that I learned from Peter Lynch. One of the stocks that he specifically brought up was Costco. Okay, we will look at the fundamentals of Costco, but what I want to point out is that Costco sells you 7 gallons of sugary drinks that you've got to drink as a family whole, and now they're going to give you the weight loss drug at half price. So they're making you fat on the sugary drinks and the portion size, but they're saying, hey, don't worry about it. We're going to give you this at half price. Is that enough to push me to invest in Costco? Remember, Costco makes their money off of memberships. They try and keep their margins down to make it very cheap. So the growth is in membership prices. It's not, and it's in some of their name brands like the Kirkland stuff that they sell. It's not in pumping prices up. So the valuation that Peter Lynch brought up is huge. Am I going to pay 50 times earnings for Costco? Well, again, in Seeking Alpha, I can pull this up. I can say, let me look at the valuation, the historic valuation of Costco. Have we been up this high? It's actually fairly low because look, during 2020, the beginning of this year, you were up at 60. You're down at 50 now. So it's getting more like it was back here in August of last year. And if we pull this up, 1 year you're up 4%. Is that good enough? Well, look at it against the S&P. If we go 1 year, the S&P's up 17%. Costco's up 4%. Do I want to go into that? It's not in my portfolio right now. It is in the core portfolio. It has been in there for a very long time, and it's sitting there because it's a good investment at the price that I paid. I think it was around $300. So it's just sitting in there. But it doesn't mean you go out and buy it right now. Again, know what you own, know what you buy. And just for everybody's awareness, the government is still shut down, but the market says don't worry about it. Kalshi is saying it's going to last for nearly 21 days. And that could be the second longest in U.S. history. Just FYI, Trump owns the first one, so he will own the two largest government shutdowns in history. And before you say that's a good thing because he's getting rid of stuff, just understand TSA isn't getting paid. The Army's not getting paid. There are people not getting paid. They are deferred, and we are in an economy that is dependent on spending. And all of a sudden, if people can't pay their rents, all of a sudden, if people can't buy their lunches, we're in a spending economy, and that would be dangerous. So here are 4 things for stock bulls to worry about other than the shutdown. Well, valuation, we are at all-time highs. It is nerve-wracking. But does that mean that you get out? Go and look at a chart. Again, the chart tells the story. The only thing you care about in a stock or an ETF is the price. The valuation is something to look at, but if the price continues to go up, you don't care what the valuation is until it matters, and it will matter at some point in time. But as earnings, we're getting into earnings season next week, and that's the next thing. Earnings stakes are high because to justify that valuation, we need a growth in earnings. And you've got earnings starting this week. We'll go over Delta. We'll go over some of the earnings that are coming up later this week. But again, you need earnings to push that multiple or at least keep that multiple where it is. And that means that earnings need to push higher because the valuation can't seem to go very high. It's going to pull back. At some point, the market's going to say, you know what? I'm not paying $700 for QQQ if the earnings all of a sudden pull back and all of a sudden the hyperscalers stop spending. Then you've got Powell leaning hawkish. We don't have a lot of information because the government is shut down. If for some reason he does not continue to lower interest rates, we have interest rate reductions priced in the market. If that all of a sudden is not in Powell's plan and the Fed's plan, you've got a problem. And the 4th thing to worry about is AI. If any of this spending starts slowing down, then it's going to be time to actually look at maybe trimming and getting some profits out of the market. But again, you're in a bull market. Everybody's going to be happy. Everybody's going to be perfectly fine. Warren Buffett's preferred stock valuation, it's called the Buffett indicator. The ratio is now higher than 2-to-1. The indicator measures the total market capitalization of the publicly traded U.S. stocks relative to the nation's GDP. It's concerning. It's a potential sign of overvaluation. It's concerning. Again, is it a reason to get out of the market? No. It's a reason to have an eye on the market. You need to have an eye on the charts like we do on QQQ, and you need to have a view of what the market is trading at. Because if for some reasons earnings come in and they come in light, be aware, the market will pull back. I'm not saying that's the case. I have not sold a stock very recently. But these are the best stocks of the last 5, 10, and 15 years. NVDA just trounces. You got SMCI, you got Palantir, you got NVIDIA, you got VST, you got Target Group, Arista Networks, Howmet. Again, these are the total return of the last 5, 10, and 15, and 20 years total return. Now, I have Apple. Apple's up there. You know, the last, 20 years, Apple is number 4. I own a large amount of Apple because I've sat on this winner. Can Apple double? I don't think so. I'm not in Apple for it to double. I view it as a savings account, and I've always viewed it as a savings account. I want Apple to be the stock where I have some money, and if it doesn't outperform the market, then I'm okay with it. It's risk reward. But is Apple leaving money on the table? Needham thinks so. They say, hey, Apple unveiled its latest iPhone. They didn't raise the prices. We think it's just coming in a little cheap. And so they're saying our investment conclusion is that Apple's lack of innovation has lowered public shareholder value by 13% through its inability to raise prices on its 3 core same-store iPhone models by enough to keep pace with inflation. That's what they're saying. So can it double? Because the growth on Apple sucks. Just sucks. They're going up against horrible growth numbers, but you can see revenue's only growing 5%. And when you look at this stock, year to date, it's up 3%. 1 year, you're up 14%. Can it keep up? I don't know. One that is keeping up, and I brought up many times, AMD, it surged 35% today. Why? Because of a deal with OpenAI. This is nothing more than news. And again, is OpenAI spending this money? I don't know. I mean, it's just a promise. It's like writing an IOU to somebody. Hey, we're going to buy a bunch, but they haven't purchased this stuff yet. So where's the money coming from? It's that circle. And do I think that you should take profits on AMD? Well, what did I say? 4-hour algorithm. I bought it at 160. I liked it. Under this 165, I was adding to it. Now, I got a little nervous on Friday. You know why? Because it pulled back a little bit. Did I get out? No. You let your thesis play out. And my thesis on AMD was it was going to outperform NVIDIA. So I took, a good 5-figure amount, and I put it in there at 160. Where are you trading right now? You are trading at 223. Is it worth it to buy it now? Maybe, maybe not. It depends on your thesis. The valuation, it's trading at 42 times forward earnings. But the difference between AMD and NVIDIA is the market cap. This is a $267 billion market cap. We can go and look at it against NVIDIA here. Let's just edit these symbols and we'll pull out Micron because I don't care about that. I don't care about Qualcomm. I don't own that one. I don't own anything else. I'm just going to put in NVIDIA because those are the two that I wanted to invest in. And when you look at the market cap, 267 billion versus 4.56 trillion. Can NVIDIA go to a $10 trillion company? Well, maybe. But you can see over 1 year, AMD has underperformed and they've got a market cap of 267 billion. Can they go from 267 to 500 billion? Yes, they can. Is the quant rating as good? It's almost as good. Again, I'm not picking a winner here. I'm just saying in my thesis, I think the return of AMD, they're lagging NVIDIA. NVIDIA has had great returns, just unbelievable returns. When you look at the PE, AMD is actually right on par with NVIDIA. So where's more money going to? It's probably going to NVIDIA. It's not going to AMD, but we just saw news with AMD can push that stock up even more than NVIDIA. If OpenAI said, hey, we're just going to buy NVIDIA chips like they went into the deal with OpenAI last time, you'll see a pump, but it ain't 30%. It's maybe 5 or 10%. But then you get to growth, and NVIDIA is the king of growth. That's where it's coming. And you get to gross profit margin, and NVIDIA is the king of that one. And then their performance, they've just outperformed AMD. So I took a bet because of the technicals, but it's also, hey, we're in an AI market. So I did say last week, I thought it put in a nice base there. Again, in the newsletter, it wasn't anything that I put behind a paywall or anything. But I said, hey, it's putting in that. And then I read this article, FTEC. This technology ETF from Fidelity outperforms the S&P and the NASDAQ. And this article was really good. It goes over why it's outperformed. And I said, well, it sounds very similar to XLK. And I own a bunch of XLK. So let's just look at XLK and let's look at this one against FTEC. Let's look at it. 1 year, it's about the same. 3 years, it's about the same. FTEC outbeats it. 5 year, FTEC underperforms it. 10 year, it's 604% versus 586. Now, I've already researched this. The expenses are exactly the same. Everything. So, am I going to change from XLK to FTEC? Probably not. Probably not. But I like reading the articles like this that tell me, hey, why should I invest in this? And then go and compare it to the current holdings that I have. And one thing that I love, and I've been very clear on this one, is alpha picks. Okay? I have been putting a lot of money into alpha picks here on Substack, and I posted it on Twitter too. I took a screenshot of the alpha picks portfolio page. Okay? I had to black out the company, the names and the symbols. But this is just the picks since June 2nd. This stock is down 8%. I have actually traded it for a gain. So again, I used TrendSpider to trade that one for a gain. The pick on 6/16, because remember, you get a pick on the 1st and the 15th, and you can see the performance is just blowing away the S&P. And so here's an example. On 6/16, the pick that they made, it is up 80%. 6/16, 4 months. 4 months, you're up 80%. 7/1, you're up 40%. 7/15, you're up 30%. 8/1, you're up 34%. 8/15, the underperformer, 0.91%. 9/2, you're up 17.5. Again, this screenshot says it all. And what I really wanted to point out with when people ask me, hey, what happens? When I buy alpha picks, what should I do? Well, I've got a YouTube video about it. You can go and look it up. I'll put it in the newsletter if you want today. But this holding percentage on the right-hand side, okay? When you buy into the portfolio, you buy 1% of the stock that they announce on that day. So say you've got $50,000 in the portfolio, okay? You're going to buy $500 of the new stock on the 1st and the 15th. That's what you do. And it's very simple. And they tell you when to sell. So again, remember, there is a link down below. You want TrendSpider, it's there on Linktree. You want Seeking Alpha Premium and Alpha Picks, it's there on Linktree. It's all right there. Now, I suggest the bundle. The bundle for Seeking Alpha, Premium and Alpha Picks, because you save $159. And then you can get a lot of what this is the Catalyst Watch of what's going on this week. And we've got a lot. It points out BMNR, which I'm in, and ACLO are in for a high volatile week based on the options volume. It gives you all kinds of tips. Now, Monday, today is OpenAI Day. Okay? This might be huge. Not only did they just announce a deal with AMD, which pushed AMD up, and I'm sure Microsoft and NVIDIA are up as well. Maybe NVIDIA might be down. Who knows? But the two stocks that have huge ownership in OpenAI, Microsoft and NVIDIA. The rumor is that they will launch an agent developer. Okay? It will be game changing, just like Sora. If you haven't seen the Sora app from last week, this is why Mark Zuckerberg was paying crazy amounts of money to developers, because he knew all of the things that OpenAI was working on. And he knew this was going to dominate the fourth quarter. This will be a huge, quick pace of announcements. If this agent builder comes out today, this is a game changer. Okay? And the Catalyst Watch kind of notified me of that. It said, hey, all day, you're going to have OpenAI with its third annual OpenAI Day event at Fort Mason. It's great. It's great. You've got gambling going on. And then Tuesday, you've got Amazon Prime Day. This is the underperformer of the Mag 7. Again, is Amazon going to get a lift? Maybe. And then It came out on Twitter. I think Elon announced it. They're going to announce something big on Tuesday. Tesla is. And Shai thinks it's a deal with Archer. I think it's a new model. It very well just could be a new model, the new low-cost Model Y. It very well could be. But, Tesla hints at possible new model ahead of October 7th. You decide what it is. By the way, Tesla's up 2%. It's the Elon news bump. You're going to get a bump and stuff like that. And then on Thursday, we can look at Earnings Hub. Thursday, in that Catalyst Watch, it brings up that, hey, you've got a lot of earnings coming up this week. And we've got Pepsi, Delta, Tilray. You got Applied Digital, which has just been a mover, a crazy mover. Oh, I guess I got to sign in. Is it going to let me sign in? There we go. You got to Applied Digital has been a crazy, crazy mover. This is at $26. We saw this one at like $5. I didn't get into it, but one thing that I want to point out, Delta has always been one that I've always wanted to trade during earnings. I never have, but the My Weekly Stock Pick on Substack says Delta earnings, can the hot streak continue? Because Delta reports and the market is pricing in a 7% one-day move. The last 12 quarters in terms of earnings per share versus estimates and the immediate one-day stock reaction. You can see it's done well. Look at that, up 12%, up 23% in April, up 9% in January. And Delta has been going nuts. DAL is the symbol. And you can see we went all the way up. We pulled back to 57. Now, what is the Delta? Let's look at Delta fundamentals, DAL. Is it a buy in the quad? It is. 4.15. Wall Street says it's a strong buy. They say it's worth $70. Maybe with this earnings, it pumps to 70 because you've seen it go to 70 before. When? It was way back here in February. So do we get the pump back up there? Because their earnings, again, they've killed it on the last 3 earnings. Can it go for 4 for 4? And then you've got Pepsi. And I took Pepsi out of the core portfolio. I sold out of Pepsi. I was sick of it. It's a hold in the quant. You're down 15% year over year. I don't want a stock that's down 15% in my portfolio. I bought this years ago. I got rid of it. Why? It hasn't been winning. I cut my loser. Once it stops winning, I cut it. I didn't have a good thesis on Pepsi. I still drink Pepsi. One thesis that I love, crypto. Bitcoin tops $125,000 for the first time. It's rallying. I said at the beginning of the year, I think at some point in time this year, it gets to 150,000. Why? Weak US dollar, government dysfunction, supply and demand. You think every time you sell an IBIT and iShares has to sell a Bitcoin because you sold IBIT, every time you do that and somebody buys it, remember, every time you sell something on the market, there is a buyer out there. That's it. Every time you buy something, there's somebody saying, hey, this is overpriced. I don't want it anymore. And then this is an analysis. Spot crypto ETFs outperform the trusts and strategy funds. I had no idea what a spot ETF was. My dumbass had no idea. So I went to Perplexity. Again, don't ask a moron on the internet. You've got so many tools out there. So I asked it and it came up. I own the spot ones. I'm outperforming. It's fantastic. IBIT in the 4-hour algorithm, it does great. 41%. I'm okay with that over 21 months. Again, over 21 months, 23 positions, I'm fine with it. Want to know why? I'm not selling it. I'm just buying it. That's a stock chart that I want to be in, whether it's up or down, whether the strategy works. I use the 4-hour algorithm to get in, just to get in. And I've been buying it on this. Did I buy at 64? You damn well bet I bought at 64. Did I buy at 66? You bet damn well. Did I sell here? No. Did I buy 63? You damn well know I bought at 63. I am building a position. I believe in this one long term. So Do your own research. That's the point of this, is if you read something, go and do your research. Don't ask people things that you can Google or ask AI. Now, I'm going to give you a paywall hack, okay? I'm going to just give this to you. I'm not going to give you what I read because it's behind a paywall on Substack. You can try this on my Substack, okay? I'm just going to give it. It's not 100%, but it's going to give you, you know, if you have FOMO and you ever see, oh, I want to see what's behind that paywall, put the link of anything into AI, into your favorite AI, whether it's Google Gemini, whether it's Perplexity, whether it's OpenAI. See if it gives you an answer. Because I got something where I saw, this is the title, Energy is the Real AI Play. And it says, power demand for data centers is set to quadruple in the next 10 years, yet energy stocks are still ignored by the market. I have just published, and this isn't me, this is somebody else, and I wanted to see it. I have just published a deep dive on an energy stock benefiting from skyrocketing capacity demand. That's the title of what I saw, okay? I went to Perplexity, and I'm going to give in the newsletter, I will give a screenshot of the answer that I got, but I don't want to put it in here, and I don't want to give you the link because I don't want you going and finding out who I was looking at. But there are several stocks that it brought up. And it said the energy stock mentioned in the Link Substack article about data center energy play with 5 times potential is most likely Constellation Energy. This company is repeatedly identified as a primary beneficiary of the surging energy demand driven by AI data centers. And you can see the performance in the 4-hour algorithm. It got you in here at 327. You're at 359. You're at 369 in pre-market. Is that a stock that you want to invest in? Because it is one that I want to invest in. Where am I finding an entry? Well, I've got this on a watch list. I'm still waiting because my ass didn't buy it at 327. I want to buy this one. Another one that it brought up, NEE, Next Era Energy. This is one, again, 4-hour algorithm beats buy and hold. You can see it on your screen down there. Another one that it brought up, Dominion Energy. The symbol is D. Okay? You can see it doesn't beat buy and hold. So find the stock that you like. One that it brought up, Vistra, VST, BEP. And I would add this one. It didn't bring this one up, but I would add Bloom Energy. Okay? This one, we've seen the decline in this, but we know that this one has an upward trajectory. It just got overbought. Okay? And it's got some short interest, but I will bring this up. Okay? It has a hold from the quant. Wall Street still thinks it's worth $57. You're trading at 91. Again, even at 91. Oh, I put a B on BE. This one right here. See how it got bought at 20? And you're still in this one, by the way. 4-hour algorithm just has killed it. Killed it on this one. From $20 to $90. And why do I bring this up? Well, I was reading the Undercover Dozen. Okay, this is a Seeking Alpha article that I love every week. I mean, Bloom Energy, not to be overvalued bet fueling the data center. Again, it's a research article. You can read the entire thing. I read the entire thing. I like it. It's on my watch list. Have I added to it? No. I've been waiting for the 4-hour algorithm to get out, and I thought it would on this drop down. It didn't. Literally, at the end of September, you could have bought this for $60. You're at $91 right now. $91. I'd throw in another one. Talon Energy, TLN, that I brought up at the beginning of the year. Okay? And any nuclear stock that you want. These are all riskier than something like Constellation Energy. But they may offer bigger rewards. Again, risk versus reward. Now, I want to bring up that I've been using this pro version, and I brought this up last week, and I'm not going to sell you on this. If you want to get it, if you are a heavy trader and you want to get this, you absolutely can. There are several things. One of the things that I've been looking at are these upgrades and downgrades, and what this particular one does is it brings up stocks that are recently upgraded in the quant. So I'm going to bring up 3 of them that I brought up before, that I have owned, that I don't currently own, that just got an upgrade. First one is GLW. Okay. This is one Corning. This is the one that makes the glass on the new iPhone. This got a huge bump, and you can see the run we've seen since April. Huge. Its valuation a little stretch, but it just got a strong buy in the quant. Does that mean you go and get it? Well, what's changed? Not much. The valuation, it's still a D. It's still 33 times forward earnings. It's still electronic components number 3 out of 20. So you can buy LPL, LG Display if you want. You can buy COHR, which is another winner. But again, this is one that just got an update in the quant. Is it time to buy? Wall Street thinks that it's only worth $76. Am I buying it now? No. But if I see something in the 4-hour algorithm that says, hey, this pullback is worth buying here, because the 4-hour algorithm got you in at $41. You're at $83 right now. I'm just going to pull this out, remove that segment, because the 4-hour algorithm got you in April and it just kept running. So am I adding to this one? Am I buying? No. Another one I want to bring up. And again, this is me being nice because they told me not to bring this up, but it's FinW. FinW is one. Is this a bounce back now? Because look, it just lost all of that. Now it's a buy in the quant. Okay. It went from a strong buy to a buy, but you can see it bouncing around here. Is this one that is coming back? We can see Wall Street says that it's worth $19. Where are you trading? $18. It's got a 6% upside. Is this one that kind of gives you a little tickle in your fancy? Well, set up an alert on TrendSpider, because this doubles buy and hold 245% versus 114% over the last 25 months. Seems pretty good, doesn't it? It's a pretty good way to trade. Then you've got another one that I brought up before that I don't own that just went to a strong buy. It's MicroStrategy. Okay. This just got a strong buy in the quant, and it went from a buy to a strong buy. And you can see what changed. Not much. The momentum has slowed down a little bit. It got a C+, but you've gone up to a strong buy. Okay. Analyst revisions A. Wall Street thinks that this one is worth $566. It's trading at $362. And if I bring this up on the 4-hour algorithm and I say, ooh, we could get this at $332. Right now you're at $362, but it's in an upward trajectory. Is this a buy? Maybe. The 4-hour algorithm makes you 1,834%. Your average win is 66% on this. Pretty good. So there's 3 stocks, 3 looks at them, 3 ideas. You use Seeking Alpha and you go over and you look at the quant and then you use TrendSpider. And I'm going to give you one final thing, because the other thing that this pro gives you over here is short ideas. And this one came up under short ideas. This I thought was really, and now if you're the kind that actually short stocks, this may be like a dumb moment, but it's Adobe. Why are you buying Adobe when literally there is nobody that's going to use that tool once OpenAI opens up Soroed everybody? The valuation is expensive. Straight, again, their EV sales. We can pull up the Analyze with AI and find out why it's expensive. Let's pull this up. The valuation mixed with certain metrics indicating high cost. For example, the price to book at 13 is significantly higher than the sector at 4, suggesting the stock is expensive. However, PE at 17 presents a discount compared to the sector. But here's the thing. It's a value trap. Growth, promising growth with year-over-year growth at 11%, substantially above the sector. It's great. But you want to know something? It's software. We've seen software underperform. And when you look at the performance of this stock, it's down over 1 year, 31%. Could it go down even further? You bet it could go down even further. And it's only got 2.3% short interest. So you're not looking at a huge squeeze up if you do short this. It's got enough liquidity. So there's some ideas for you. There's the podcast. It's just a good look at why we're in a bull market, some ways to think about things. And again, the tools, everything's on Linktree. Okay, TrendSpider is on sale. You can get up to 32% off, $50 a month. Again, if you're not making $50 a month trading things like MicroStrategy and stuff just on the 4-hour algorithm, you're not trading with enough money, and it makes no sense to do this. But again, you have to trust charts. If you don't know anything about technical trading, go and get a chart software. Don't pay for TrendSpider. Go and learn charting on an old school charting program. Okay, go and learn technicals. Ask OpenAI, ask Google Gemini, ask Perplexity. Say, I don't know technical trading. Can you help me set up a course on technical trading? Boom, it'll do it for you. Learn one topic a week. You'll be probably better than I am in like 3 months. But again, TrendSpider, if you're used to using charts, it's the best charting program out there. And my 4-hour algorithm, no joke, that's what I use to trade on. And so it does really well on a lot of names. And the other bundle that I suggest is Premium Alpha Picks. You saw me use the quant. You saw me bring up the return of Alpha Picks just since June. These are great tools to have, and they are on Linktree. You can get them. Go and search. If you see some link here that interests you, go and search it. And if you have any questions, my email address is up here. Do not email me with something that you can Google. Email me with questions about things, but not something you can Google and get the answer for. That's what annoys me. And don't ask me about a stock. Because the common response I will give you, if I own the stock, I will give you my thesis. But if I don't own the stock, I'm telling you, I won't give you an idea. So if you have any questions, hit me up. I will talk to you tomorrow. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts